Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. So look, before we get started with today's video, I need you guys to do me a favor. Make sure you like, comment, share this video. Most importantly, subscribe, hit that bell for notifications, and make sure you check out the description, right? I got tons of links always in my descriptions. If you want to get pre-approved, apply for financing, home equity line of credits, refinance, whatever it is, the link is in the bio. Or if you just have general questions and you want to set up a consultation with me and my team, that link is in the bio as well. All right? And most importantly, go follow me on Instagram, MG the Mortgage Guy. And if you have any questions, you can shoot me a DM, but please be patient if you send me a DM on Instagram. My DMs are like the Matrix over there, all right? I get hundreds of DMs every single week, so be patient. I personally answer them. I try to get to them as quickly as possible. So if you do leave me a DM or a message or a comment or something like that here on YouTube, just be patient. I'll get to it, all right? So let's get into today's video. Over on Instagram, I get tons of questions, like I just told you guys. Tons of DMs, tons of questions. But one of the most common questions is, hey Matt, if I work a W-2 job and I want to quit and start my own business, can I still get approved for FHA, VA, or conventional financing? Now, let's take a little bit of a deep dive into this, right? So that way you guys understand. All three of those programs, we need to show a 2-year consistent work history. Right? And once you stop being W-2'd and go and become self-employed, or even a 1099 independent contractor like you drive and Lyft or Uber, or become a real estate agent full-time, you just now start your clock over to 0 again. Even if, let's just say for example, you work at UPS or Amazon or one of these places as a truck driver and you were W-2, but now you say, you know what? I understand the trucking business. I want to go out on my own. Although you are in the same line of work, going from a truck driver to still being a truck driver, but you're self-employed, you still start that clock over from 0. All right? So I want you guys to be mindful when you're out here plotting and planning of home ownership or investing and using conventional financing. Make sure you don't quit your job before you accomplish that goal of purchasing that property, because it could set you back 2 years. And most people just don't realize that. Now, on the flip side, let's say you've been working your W-2 job and you've been an Uber, Lyft, or real estate agent or self-employed truck driver also for 2 years, and you've been filing that income on your tax returns, that self-employed income on your tax returns for 2 years, along with your W-2 income. Now, if you quit your W-2 job, you have a 2-year work history of showing through tax returns that you've been self-employed or a 1099 independent contractor. So now you can go ahead and quit that job and use that income, that self-employed or 1099 income, to help you qualify. Now, also, again, keep in mind, because when we're underwriting anyone who's self-employed or 1099 income, we don't go off the gross income. We go off the net income. And the net income is basically what you're telling Uncle Sam, your silent partner, what you've made after all your expenses. So quick example, if you made $100K gross revenue for your self-employed or 1099 business, that is not the income we use. Now, if you're W-2, we use the gross income to qualify you. On self-employed, we're going to go off that net. So let's just say you made that $100K gross revenue, but you told the IRS that you had $90,000 worth of expenses and your net income is $10,000. And that's what you're going to pay taxes on, is that $10,000. Now, guess what? Lending purposes, now we're going to use that $10,000 to qualify you guys. All right? So just be mindful when you guys are out there looking to purchase property and you're trying to decide whether you want to stay self-employed or run your own business. Just keep in mind how lenders are going to view that. My advice is always keep your job. Unless you're forced out, you know you're about to be fired, or you're just making so much money already being self-employed. Maybe it was you're part-time self-employed and now you're ready to kick it up a notch and really go after it. then I would probably recommend keeping your W-2 job and start your self-employed business, but do it, after your W-2 job, and get accustomed to bringing that money in and file your taxes with the money while you have that W-2 job. All right? Now, let me break down something else to you since we're on the topic. If you have that part-time self-employed income, we cannot use any of that income to help you qualify if you still have your W-2 job, unless you have a 2-year work history of that as well. So even if you're not self-employed, let's just say you part-time, you have a part-time job. Say you picked up a job at Walmart or Home Depot or whatever the case may be, right? And you don't have a 2-year history of showing that part-time income, we can't use that income either. So just keep in mind, the rule of thumb is 2-year work history is what a lender is always going to look at. Now, let's take this to the investing side. If you are looking to buy an investment property, right, and you're looking to put it in your LLC or your business corporation name, then the 2-year rule is out of the window, because hard money financing, asset-based financing, they don't look at your W-2s, your tax returns, your pay stub, like an income-based lender, which income-based is conventional FHA, VA financing. Asset-based is only looking at the project, meaning the property. So if it's asset-based, we're looking at the cash flow of the deal from the rental units. If it's hard money, we're looking at the ARV, right? We're looking to see what's the spread. Are you at a 65, 70% ARV? Do the numbers make sense? Okay, great. We're gonna go ahead and fund that deal for you because it makes sense. So if you're looking to be an investor, but also let me say this, those programs require much larger down payments, right? So anywhere between 10 to 20%, just depending on your level of experience with hard money. And if you're doing anything asset-based, it's pretty much going to be 20% to 25% down payment. All right. So if you're looking to buy strictly investment properties and put it into your LLC, that 2-year rule is out of the window. You don't have to worry about it. As long as you have the capital for your down payment, your closing costs, you will get financing if the deal makes sense. All right. So I hope this video helped somebody today. If you have any questions, I'm going to put links in the description. So if you want to have a general conversation, click that link below. One of my team members will reach out to you and answer all your questions. But if you feel like you're ready, and 2020 is going to be the year that you're going to purchase your first home, your second home, your 10th home, and you want to work with a good mortgage team, we will be honored to help you. All right. So click the link in the description. Let's get you pre-approved. Let's get you ready for financing. And again, my name is Matt Garland, NMLS number 58700. I'm better known as MG the Mortgage Guy. Follow me over there on Instagram. And please make sure you like this video, share it with your community. More videos to follow. All right. Until next time. Peace.